All right, so like imagine this scenario. You're just scrolling through the news, right? And suddenly, bam, headlines everywhere about some crazy international crisis. Maybe even like whispers of war. Gets your heart racing a bit, right?
Yeah, definitely. That feeling of like what's going to happen next can be a little unsettling to say the least.
Totally. And you know what a lot of people do in those moments, like maybe even some folks listening right now, they find themselves checking their investments. It's like this instinct, right? Got to protect what you've got when the world feels uncertain.
It's the whole flight to safety thing. When things get shaky, investors look for a safe haven, somewhere they can like park their money that seems like it'll hold its value or even like go up when everything else is tanking.
Which brings us to today's deep dive. We're tackling those safe haven assets, those like financial fortresses everyone runs to when things get uncertain. And the big question we're wrestling with, does Bitcoin, with all its digital gold hype, actually deserve a spot in that bunker next to, well, actual gold?
And what's really interesting about this whole thing is it's not just some like abstract financial debate, it gets at something deeper. How we as a global society react to fear and uncertainty in this digital age.
Absolutely. And to help unpack all this, we're looking at this article from Zero Hedge. It's called, get this, Unlike Gold, Bitcoin is not a safe haven. Yeah, let me tell you, the author doesn't pull any punches.
Yeah, they jump right into it using a prime example of this safe haven dynamic in action. Those recent geopolitical tensions between Iran and Israel, when Iran launched all those ballistic missiles.
Oh yeah, talk about a moment where everyone held their breath, wondering what would happen next.
And like clockwork investors flock to gold, which, I mean, it makes sense. It's what gold has done for centuries in times of crisis, seen as this steady rock when everything else is uncertain. And sure enough, its price surged as investors sought that safety.
But here's where it gets interesting. Bitcoin didn't exactly follow suit, like at all. Gold's price is going up, and Bitcoin well and takes a dive. The author even has charts that show this so clearly.
Yeah, it's that unexpected reaction that really makes you think. Because, like we were saying, this whole safe haven idea depends on investors moving towards something when they're scared, right? Searching for that stability. But Bitcoin, at least in this case, acted more like, I don't know, a risky tech stock or something, plummeting when the market dipped.
So maybe Bitcoin just got a little spooked by the headlines.
Yeah.
We've all been there, right?
Maybe, but here's the thing. It wasn't just a one-time thing. The author points out that this same pattern, gold up, Bitcoin down, happened in basically the same way during other Iran-Israel escalations, both in 2023 and 2024.
Wait, so multiple global freakouts, and each time Bitcoin seemed to miss the memo on how a safe haven is supposed to act.
Exactly. This consistent pattern really makes you wonder, how does the market really see Bitcoin compared to something like gold, which has that long, proven track record? Like, is Bitcoin just not mature enough yet? Or is there something else going on here?
It's like you think you know someone, you've heard them called a safe haven and all, but then they keep acting totally out of character when things get real.
Mhm.
Makes you wonder.
Yeah. Right. And the author actually digs into this by looking at the relationship between Bitcoin's price and the NASDAQ 100 index. The NASDAQ, where all those big tech companies like Apple and Amazon are.
Ah, the NASDAQ, home of the tech giants, those exciting startups, and let's be honest, the occasional bubble.
Exactly. And get
Yeah.
this, over the past 5 years, the correlation between Bitcoin's price and the NASDAQ's movements is a whopping 0.88.
Okay, now I got to ask, for those of us who don't speak statistics fluently, what does that .88 actually mean? Good, bad?
Basically, it means that 88% of the time, Bitcoin's price moves in the same direction as the NASDAQ. That's a really strong link. To put it simply, when the NASDAQ goes up, Bitcoin tends to follow. And when the NASDAQ dips, well, often, so does Bitcoin.
So it's like Bitcoin's basically tethered to the NASDAQ for better or worse.
Pretty much. And that connection is super important for the author's next point, which is the tech bubble, and why it might be a little worrying for anyone who owns Bitcoin.
Ooh, the B word, bubbles.
Yeah.
Now, I'm no financial whiz, but I do remember learning about the dot-com bubble back in the 90s.
Yeah.
That did not end well for a lot of people.
You're telling me. And while no one can predict the future, there are some, let's say, interesting similarities between the tech scene now and back in those dot-com days. And the author's point is this. If Bitcoin is mirroring the NASDAQ so closely, maybe, just maybe, it's being pulled along by the same forces that drove that dot-com bubble in the first place.
So is Bitcoin just another tech stock wearing a disguise? And if so, what does that mean for people who see it as this like revolutionary new asset, a store of value for the future?
Those are the million-dollar questions, and that's exactly what we're going to dig into in the next part of our deep dive.
You don't want to miss this, folks.
Yeah.
Things are about to get really interesting. So we're kind of painting this picture of Bitcoin, and it might not be the digital gold everyone thought it was, at least compared to how actual gold acts when things get a little wild out there in the world.
Yeah, for sure. Especially when we look at those geopolitical situations we were talking about. Gold goes up, Bitcoin down. Not exactly what you'd expect from a safe haven.
Right. And you know what's funny? Like, just as we're questioning this whole Bitcoin as a safe haven thing, the author we're talking about, they say something like, we need to stop calling Bitcoin digital gold if it doesn't act like it. I mean, they're basically calling Bitcoin out for being a poser.
Yeah. It's kind of brutal, but they make a good point. Like, people are drawn to gold when things are bad because it's seen as stable, right? It's been around forever. But if Bitcoin is always dipping its toes into the tech stock world, which is, risky and unpredictable, it's going to lose that sense of stability that makes a safe haven a safe haven.
It's like that friend, right, that borrows your emergency credit card and then maxes it out at the casino. You're like, dude, I thought I could trust you.
Totally. And the author actually compares all this Bitcoin hype to the dot-com bubble back in the late 90s. Remember that? Everyone going crazy for internet companies, even if they didn't make any money.
Oh, yeah, it was wild. Anything seemed possible. Everyone wanted in on the action. Until, well, it all crashed and burned.
Yep. And the author's point is maybe, just maybe, we're seeing a similar kind of, I don't know, irrational excitement around Bitcoin, especially with how closely it's tied to the NASDAQ, which, let's be real, has a lot of those same dot-com era warning signs flashing.
Okay, so like what kind of warning signs are we talking about here? Break it down for those of us who aren't glued to the stock market all day.
So back in the dot-com days, you had all these companies with crazy high valuations, but no real way to make money. They were growing fast, sure, but it wasn't going to last. And now some people are saying we're seeing that same pattern in the tech sector companies being valued more on hype than anything solid.
So the worry is that Bitcoin is wrapped up in this inflated tech bubble. And if the bubble bursts, Bitcoin goes down with it.
That's the big question. But look, that's not to say Bitcoin doesn't have potential. The technology behind it, blockchain, that's revolutionary stuff. It could totally change how we think about money, data, all sorts of things.
For sure. Even I can get a little excited about the whole decentralized system thing, but we got to be realistic here.
Totally. And that's why this whole comparison to the dot-com bubble matters. It reminds us that markets aren't always rational. They can be driven by emotions, speculation, and that's even more true when we're talking crypto, where things move so fast.
Okay, so where does gold fit into all this? We've talked about its history, but is it really the safe haven everyone thinks it is?
That's the question, right? And that's what we're going to unpack next. Because even gold has its quirks, those moments where it might have surprised some investors. And understanding those moments, that's crucial for anyone trying to build a portfolio that can weather any storm.
All right, hit me with those golden insights. Let's dig into it. Okay, so we spent a lot of time kind of, questioning this whole idea of Bitcoin being digital gold.
Yeah, we've definitely poked some holes in that.
But before we wrap up, I want to talk about actual gold for a sec. Like the author we've been discussing, they seem pretty convinced that when it comes to those global what-if moments, the old ways are still the best.
Yeah, and it makes sense, right? Gold has this whole history, thousands of years of being the symbol of wealth and, stability across so many cultures. It's kind of wild.
It's true. Like, you can almost feel the history when you hold a gold coin.
Yeah.
It's heavy, it's real, it's not just like ones and zeros on a screen like Bitcoin.
Exactly. And that feeds into the whole safe haven thing. It just feels reliable, you know what I mean?
Okay, but has it always been a safe haven? Has gold always held its value when everything else is tanking? History is full of surprises.
That's a great point. And to be fair, even gold's track record isn't perfect. There have been times, like back in the 80s when interest rates were super high, gold actually did dip a bit. Unexpected things can happen.
Huh. So even gold had its off days. That's interesting. But I guess overall it still has a pretty solid track record, right?
Absolutely. And that's what makes this whole conversation so fascinating, honestly. We're at this point in time where you have this old tangible asset like gold, and then this new digital thing, Bitcoin, both kind of competing for that safe haven title.
It's like old school versus new school, but for money.
Totally. And the author leaves us with this question that's really stuck with me. As we navigate this crazy financial world, right, where do we put our money? Do we stick with tradition, with something we can hold on to like gold? Or do we go all in on the new, on tech like Bitcoin that could change everything?
It's like choosing between a vintage muscle car and like a spaceship. Both cool, But which one actually gets you where you need to go?
Right. And the answer is it depends. It all comes down to your own situation, your goals, your risk tolerance, how you see the future. There's no one right answer, which is what makes investing so tough, but also exciting.
So basically, no shortcuts, no magic formula. It's about doing your research, figuring out what makes sense for you, and making those choices.
Exactly. And that's really what we're all about here on the deep dive, getting you to think critically about this stuff, question everything, and make those smart choices that work for your life.
Love it. Taking control, not just following the hype.
Exactly.
Yeah.
Because knowledge is power, right?
Yeah.
The more you know about how this all works, the better off you'll be when those market waves start crashing.
Couldn't agree more. And on that note, we'll leave you with that to think about. This has been The Deep Dive, encouraging you to keep learning, keep questioning, and keep exploring the wild world of finance. We'll see you next time.